In this section, we'll learn a very useful and interesting techniques. In practice, companies often need to compete to get a customer or get a contract. In this example, we will learn how to find a lowest bid price to win the competition. Let's see this example. In Excel, we are giving the information for a project. We have the price for the equipment, the pre-tax salvage value, units price, and the variable cost is 45% of the sales. We're also giving a fixed cost every year. We know the depreciation will follow the maker system for 4 years. And there is a immediately net working capital, tax rate, required return. We have all the information. Similar with other example, we will start with a pro forma income statement. The revenue for this project will be equal to units times price per unit. It's the same for every year. We add dollar signs and we can copy this to year 4. The variable cost is the revenue times 45%, and we copy it to year 4. The fixed costs every year is 425,000. Depreciation, we will rely on the depreciation rate and equipment price. We'll use the equipment price times the first year's depreciation rate. The second year is the price times the second year's depreciation rate. The third year is price times 30 years. Year 4 is equipment price times the last year's. Based on this information, we can calculate the EBIT. EBIT will be equal to the revenue minus variable cost minus fixed cost and minus depreciation. We copy this formula to year 4. This is the EBIT. Based on EBIT, we continue calculate tax rate. Tax rate is 21%. Because it's applied for 4 years, we add dollar sign. Notice here for the year 2, we have negative EBIT and taxes payment. Because in year 2, we have largest depreciation expenses. The net income will be equal to EBIT minus tax payment, the very bottom line of the income statement. And follow the bottom-up approach to calculate the operating cash flows, we add back the depreciation. Always remember for the project cash flows is not a real cash flow. We need to add it back. The operating cash flow is equal to net income plus depreciation. That's the bottom-up approach to calculate operating cash flows. Next step, we have a salvage value for this equipment after the project, which is 75,000. At the end of the project, we can equal it to the 75,000 because the depreciation system is a 3-year system and we have the 4 depreciation rate. After 4 years, there should be no book value. The tax on the sales should be the pre-tax value minus the end book value, which is 0. And then we can tax the tax rate. If the project life is shorter than the depreciation life, then we need to be careful whether we need to minus a book value. The after-tax salvage value will be the pre-tax minus the tax payment. Should be 59,250. That's the after-tax salvage value for this project. Last step, we move all the operating cash flows and then fill in all the investment. In terms of the net working capital, we have a net working capital investment at year 0. And at the end of the project, we expect to recover the net working capital. That's the change in net working capital for this project. Last row is the capital spending, which is the price of the equipment. At year 0, we invest 3,300,000 in this equipment. And at the end of this project, we add the after-tax salvage value. we sum all these inflows and outflows for each year. This is the total cash flow for this project. And we calculate the NPV based on this total cash flow. The required return is 10%. We select from year 1 to year 4 and then plus the initial investment. That's the NPV for this project. Next is the interesting part. We'll learn a function or analysis tool in Excel. Is called solver. We go to data and there is a add-in tool called solver. If you don't have this add-on, you can search solver and you should find it in the add-in tools here, solver add-in, and you click OK. It should be added in your Excel. Once you install the solver, you can click it. Using the solver, we first set an objective. In this example, we set the sale NPV as the objective C, and we're trying to find when the objective equal to 0. We enter 0 here. We want to figure out the lowest unit price. We've entered the change in value cell is D11, the price per unit. Next, we will click solve. If you keep solver solution, you will find NPV turns into 0. And we want to keep our original value. We want Excel report the solution for the lowest price. We click answer here for the reports and we select the restore original values. When you click OK, you will find an answer report here. Our objective cell is NPV and the original value is this one. The final value is 0. The variable cell is price per unit. Original value is 25. And the solver tool gave us the lowest price, which make the NPV equal to 0 is 21.1. Here with this solver, we can put the minimum bid price. When we set the bid price, we can expect the NPV is equal to 0. This is the lowest bid price we can accept in this project.